Good morning. How's everybody doing today? Beautiful day in the neighborhood here in South Florida. All right, markets. Little down move going on here after was a little pop up off of the low, 444, 444-ish. Little gap down to support. And from last week, we've got a void below, and you really don't have much here to stop this from going down. So I think it's only got one direction. May not be an easy direction initially. This 440 level that I got marked off here. There's big option bets there that may initially hold it. But if we get a test of this level, which seems inevitable, I mean, unless prices just rip off of this gap down and move up and end the day with a wide range bar, which possible, I don't think likely. What I think is only what I think. We'll see what plays out. But if we were to get a gap down reversal like that with a big green bar, that would change things somewhat. We'd certainly have a pretty big trading range going on if it held there all day. Last Friday, our expectation was for a go nowhere type of day, running in place day. That's exactly what we got. Things went nowhere. And what we see here, if you look at it, after this gap down, while things have jiggled around a little bit, if you look at the, just the closing prices, the markets haven't moved in 3 days. So will they move today? Well, we got all these financial earnings coming out in the middle of the week, Wednesday, Thursday, and they could be movers. We'll see what they're doing into those earnings reports. But, if we get a bearish close today, maybe things just do go down into those earnings reports. We'll see what happens at this level there. One of the things to watch for that we're price pattern traders. That's what we do. We look at pictures. We boil it down to the simplest thing. We look at pictures. And so we've got this piece of information here of a lot of option trades going on here and bearish bets. So what I've seen happen is that it tends to act like a floor. Right? So as prices come down there, one of the things that could happen is it just marginally breaks through it and it starts ripping back up again into the gap fill here. But if it starts jiggling here, it's like, it ain't bouncing. It ain't coming off of the low. And now if it starts to break, it's like support being broken, like this, this level that was held. It's like support being broken, but you have this sideways going on here. And if it doesn't bounce off of it, well, then just imagine stops getting hit and positions being unwound, and down it goes. Yeah, so we'll see what all happens there. So we've got this, what we call a void over here, and that opens up the possibility of coming all the way back down. One of the things we spoke about last week was respecting wide range bars, and they're power bars. I also say they're the weakest link because they're not supposed to get retested in a significant way. Now, we usually look at the, initially the 50% mark of the bar just as a subjective reference point that typically holds, but it's after it starts to move around at the top. And that is in part what a 1, 2, 3 pattern is, or what we call a 1, 2, 3, 4 pattern, is that it goes sideways there. This did nothing to go sideways on this time frame. It just went up and now it came down. So, in a way, it's like, well, this could pick up some momentum and just go right through it since it's starting from a higher level up here. So, I think we kind of got a bit of a messy situation here until proven otherwise. Futures, you can see this little down move, support, and 4,400, same scenario, but same point SPY versus SPX, but this is the price support level. And it's here. We've got 100% retracement. There was a failed attempt, actually 2 failed attempts to try and go higher. And now, if it comes down, if it is down here. So one of the concepts, right, Master Trader, we have concepts that guide our thought process. And one of them is when prices come down to support, there were buyers there before. Our expectation is there'll be buyers there again. And what's the reaction? So it's similarly to, looking at what I just explained about options and high open interest. All right, if that is a type of support, okay, and prices don't bounce and they jiggle sideways, same here. It's at support, right? As this came down to support, it ripped up. Now this comes down to support. How many times can you lean on that support? Well, if this is going sideways here over a period of time and it doesn't go up, well, buyers are becoming skeptical, less confident about this level. So that sideways price action begins to create an area of supply that can drive prices down. Now you put this market maker open interest concept, what some refer to as gamma, on like throwing gas on the fire, and that could get things, to go down a bit faster. So we'll see. Right now, it's just we're in monitoring mode. Let's see what happens here. Let's look at other markets. Oh, a little bit more bearish there. And it has been more bearish. Right? 35.95. That's what I've got written down. 34.90, 34.95. Yeah. So, leaning on that level, right down here, it has to break this support and it's got to go all the way down here. So what I would like to see happen, well, we see the NASDAQ going lower, right? That's going to have a bearish influence. Tech stocks and so on, they start going down. Now, if we see financials start to go down, right? Those earnings are coming out. So maybe they go down into the earnings report. You can look at what Citibank is doing and Goldman and so on and so forth. If they're going down, the spiders or SPX should be going down. Now, if this goes down, and now we know, last I looked, 43.90 was like 70 by 85. Let's take a look, 43.90, 43.90. It's not that much now. So, but if this starts to drop toward this level, maybe, 43.70 or so will have enough premium that it would make sense and you're getting further away. So let's see if the markets actually, begin to sell off, cut through this level here, going down to the next, premiums pop, just like any other credit spread. We do credit spreads in 2 different ways, right? So for more days, we look at a daily pattern and we see, say, a bullish bar and we say, okay, that'll hold. Intraday, the way I look at them, you can do it that way intraday, but I'd rather see some kind of climactic move to the downside and then the stabilization and the premiums get juiced up down below. And so what's McGraw saying? TNX also controlling. Yeah, well, that's the focus. That's the market's focus right now, McGraw. Interest rates and oil. And I can't remember the year, but in my market memories, I could remember a time, and I'm probably talking 20 years ago or so, where equity markets were so focused on interest rates and bonds that on a 1-minute chart, the correlation was incredible. And then all of a sudden it detached. Nobody cared about bonds anymore. So these these intermarket relationships, they have a tendency over the long period of time. You pay attention to them, but they have these periods where they really come like lockstep, with each other, and other times where it's like, oh, you know, nobody cares anymore about bonds, or nobody cares about M3, or nobody cares about CPI, and so market environments change. That's really what happens in markets. So we like things to just be consistently the same day in and day out, so we can do our thing, and it's nice when it happens, but it's a trap if you think that it's going to be the same every day, all the time. Now, one of the things I pointed out in the weekend letter, and it's more so in the Dow than everywhere else, but we've got this head and shoulders top pattern that we're waiting to see, right? Just based on the bearishness of yield curves and many other things, the transports that have gotten decimated and so on, that this should break, and it's got a void below. So there is the potential here for this distribution pattern to crack through here. And then, well, if you haven't seen this, it's pretty nasty what happened last week. So transport's going down, yield curves inverting, stocks like FedEx and truckers and rails, and all of that is recession stuff. Right? Do the higher time frames support that also? 2000, McGraw, which was a very painful beginning of time in my life. Not only the market fell apart, many other things did. Do the higher time frame support what, Robert? So I don't know exactly what I was saying at the time, but do the higher time frames support a bearish point of view? Well, look, as we change time frames, we change pictures. Okay. And so as we go to a higher time frame and we compress the data, so we look at a weekly time frame, and what we see on the Dow is a topping pattern. And so we've got, right, what we could say is a head and shoulders pattern here with a lower shoulder that's broken, right? Its neckline, and this is just, a pretty significant move up as a retest to make a lower high. So yes, it does. It does support that. Now, the question is, now that it's created this pivot, when it goes down here, does it hold? Does it get down there? That's what we have to, monitor on the smaller time frames. What typically happens in a scenario like this is the concept of a greater than 100% retracement, where it breaks through here. So maybe a whole number comes into play. Maybe that pivot low, since there's really nothing over here, there's nothing over here. This is the most significant area of support down below. So look, I don't want to get too bearish or look too far ahead, but there's many bearish things that are saying, look, if you're long, you better be careful. You better have it hedged. You better, have your stops in, because, we can all have opinions about many things, but this is not looking good. This, I don't know, this is just prices going up fast with this higher yield curve, expanding like that. We've talked about this over the last month or so, the divergence between here and here, and how it's really unusual, because if we go back in history, they typically move together. And we see when they move together, and you go back and look at what happened in the markets, it's not a pretty picture. Not pretty at all. Go and look at what happened at those points in time. Nastiness. NASDAQ went down 95%. Right? This was bad. This was bad. Now, it's different this time, right? But there's some things that are the same. So and transport's going down. Well, the message, you got the message already. I don't have to repeat it. So you want to be careful, or you're going to be sorry, or short, puts, whatever. Breakout, failure, and look, this doesn't look good. Right. Who's going to buy before it gets down here? We'll see. We'll see. We already looked at YM, Bitcoin. We've talked about the correlation, which started back here with Bitcoin topping out. And, you've got now people coming out. You know what? When you've got these people in the market, these gurus that are on YouTube and whatever, and they never talked about Bitcoin in their life, or very little. And now all of a sudden they're experts. It's a warning sign, You go and search Bitcoin and see whose name pops up, and see the kind of stuff that they're promoting, getting rich, and it's going to gazillions of dollars and all of that. Just stay away. Crude oil down on support, down here today, kind of, we'll see if that breaks or not. Silver up here. It ain't waiting, Dan. Ain't waiting. Gold. And we're putting these in our ETF letter. So they're going to gap. So we'll have to deal with that. And, this is, interest rates going up, and that, you see the 3-month going up, which supports the dollar. You can see the dollar's been rising for quite a while. And so there you have it. We'll see, when the markets want to drop, not if the markets are going to drop, and how much they're going to drop, and all of that. And we'll continue to read the different pieces that we do on a day-to-day basis and intraday. To you, my friend, Dan.
Good morning. So yeah, 0DTE, well, just for the indexes. Friday, when I was when I was posting credit spreads, and then I looked at the date for next week. I'm like, wait a minute, that's not 7 days from from last Friday. What's going on here? And it's not a quarterly expiration. And I said, oh, I forgot, it's Good Friday. So that's why we have a short week here. So only 4 days if we're selling the weeklies. We got a lot of opens. We have a lot of new plays. If I just had to generalize it in one statement, we're bullish on XLE stocks and gold, and bearish pretty much on everything else. But I've had a bunch of alarms go off here, and we'll go through them. Obviously, in the first 5 minutes, Qs, we actually had a short under the low, buying long puts. Microsoft, PayPal, Twilio, Lemonade, Archie, all bear call credit spreads. All those alarms are going off. I didn't have any earnings today, but yeah, earnings season starts off with banks. So let's see what little things I have in here to look at. 51.22. All right, now this is in a trading range. This was bottom of the range, so that would have been an acceptable trade, buying on support and reversals. Now we have a big gap up here. So is that what we call a pro gap? No, because it's not igniting a new move. But it's what I call a bullish gap. That's a huge bullish gap. 80% into this. So let's see what it does. And here's another pro gap, Varu. So this is in a nasty downtrend. And look where it's gapping up. That gap of gapping over 1, 2, 3, 4 major pivots, highs. That's a professional gap. So now we gotta see if we have a pattern, have a price void, and figure out how to get on board. So I have that in the bottom 5-minute chart. We'll watch them. Shop. I think they're doing some talking about stock splitting, and I talk about it all the time. Just ridiculous people, driving it up 10 for 1. So there's no swing pattern here. It's just gapping up into this red bar, but possibly 30-minute high, day trade long. This Twitter was another example. This, they got the Elon Musk news here of accumulation, and then it gapped up again. And you all heard me. I'm so short biased on these ridiculous pumps. And now, Musk, the social media agitator in chief, as they call him, he tweets over the weekend, no, I'm not going to join the Twitter board. So that was down. I guess I guess people driving it up want them on the board. They want change. Tesla. So Tesla's gapping down pretty big. I don't know how much of that is market based or how much based on the news. But that was my first reaction too when he mentioned Twitter and getting on the board. I'm like, dude, don't you have enough on your plate? I mean, he's making cars. He's flying into space. He's stretched. I'll give you that. T newspaper said they're going to try to raise prices because of inflation and all that, and supply chains and payroll, all that kind of stuff. And I'm assuming today was the effective date of a spinoff. They sold part of their company. Now, so when you have a spinoff like this, yeah, I mean, there's no, it's going to mess up our chart. Let's see, if you're getting rid of part of your business, but you're getting cash for it. I'm talking out loud, like, should there be a reason for the charting software to close the gap here? Just close the gap, bring it back. Because if it would, this is a beautiful bottoming pattern. Beautiful. Breakdown failure, retest above the 20 and the 50. Look at this. This is a core long setup right here on the daily, weekly. Well, Craig might say that's not a core. Okay, fine. Target 26, 27 bucks. They're in a beautiful alignment. Talking about beautiful alignments. When I was scanning this over the weekend, look at this beautiful alignment. Daily, weekly, monthly. Look at that monthly. That is a fantastic. I gotta do a chart lesson on that. That is a fabulous multiple time frame in alignment. I was looking at puts here also, but there's no weeklies and there's no even strikes, but I'll just buy the stock. Let's see it gapping up here a few pennies. And JetBlue says they're having to cut some flights this summer because staffing problems. They're the ones making a bid for SAVE. Spirit Airlines. Let's see, keep an eye on it, see what it does if we get a reversal mark support. NTs and Billy, I see. I'm bucking the trend. There you go. There's a bullish gap. Okay, so it's gapping over this prior pivot high. So that's bullish. Putting that in a window. So let's check the whole sector. Chinese internet stocks. Billing, I noticed. So a bullish gap, but it's range bound. Baba is weaker. Wow, that's weird. That MTs is so strong and Baba's still sucking wind here. Thomas Gold and Nike. Yeah, we have gold in our ETF trader. Yeah, so I like gold. Yep. So yeah, I said gold and oil. Nike, yeah, it's a continuation short. There's a number of similar patterns like this, and we have a bunch of them in our weekend letters. Let's see. So XLE had a beautiful close. That's gapping down a little less than $1. All right, we'll see what it does in the first 30 minutes. I have a lot of bullish oil stocks, a lot of them. Twitter, we talked about Tesla, talked about Billy. I just had a Redfin low alarm go off. We're short that still from last week. Let me set a new alarm. 1470, 1550. That's how I manage my opens if I don't have them in a window. You gotta set alarms. So here's another one. So, hey, Thomas, you asked about Nike, and it's fine, but this one has more room to fall. IGV is software ETF. I can't tell where it's gapping, but that's a beautiful setup right there. Sell setup weekly, green bar ignored, continuation. Dish, I'm giving that as a naked put play, naked 30s. CMC, and I'll make the turn here. Over Friday's high, you can set an alarm. Deer, Friday's high, put spread, rock. There's another continuation lower pattern, Thomas. I said there's a bunch of them. Some of these transports, there's a number of Climos on the transports. And this Wednesday, MT Live is Climos. So I'm sure we'll be talking about some of those transports. But here, CYH, nice continuation. Lemonade, breakdown from a Head and Shoulders. Spot, Greg's Dog, continuation lower. PayPal, continuation lower. ARCG, breakout failure. Price void. AMD. I actually had AMD. We talked about this Friday, saying, yeah, as a day trade, it looks lower, but it's just down too much for a swing trade to me. But if it were able to get over Thursday's high, then it would be a reversal. So it's one of those patterns of momentum is definitely down and it looks ugly. But set an alarm. If it goes up there, then it's a nice turn. CCJ alarm, spot alarm, Rockwell alarm. Well, CCJ alarm, CCJ 5, a deer alarm. Wow, deer, it was getting down. Now that alarm went off in a weak market, so that's impressive. All right, so Greg, I'm going to be slammed here at the open with all these opens. So if you see anything, feel free to talk. All right, so CCJ. You know, this looks great. So let's just buy CCJ. That's a beautiful pattern right there. All right, let's look at all these alarms going off. Rockwell, 5-minute. I'm gonna type all these out. So Rockwell is a go. Spot's a go. Lemon. See, some of these are credit or. All right, Deer, 5-minute high. ARCG looks lower. BKR has bearish gap. ARCG. Hey, PayPal looks great. Short 5-minute low, stop Thursday's high. This what I had as a call spread. Well, so see, George, I said, you know, there could be some monkeying with the spinoff, and they get cash for it, and so on and so forth. So that's why I'm not sure how they're going to handle it.
Anybody know what's up with this NRGD? That's too ridiculous a gap, some kind of reverse split or something.
I don't see a big gap. What are you talking? NRGD? I don't see it.
Oh, maybe it's TC 2000. Something's weird here.
Yeah, look at mine. NRGD.
Yeah, NRGD. Yeah. Micro sectors, US big oil index, 3 times reverse leverage. Frenchy asked on YouTube. So I don't know. I have to look in e-signal, but it's I guess bearish on oil. Inverse leverage, 3 times leverage. Be careful with that, Frenchy. All right, YouTubers, we'll talk in the morning.
All right,
We get to sign up for MT Live.